All right, today we are talking all things silver with GlobalX's JC Daigle, Vice President and Portfolio Manager of Options Overlays. JC, it's great to see you.
Thanks, John. Thanks for having me.
All right, let's dive right in. What is driving precious metals these days?
Well, John, price of gold continues to make all-time highs, breaking above the 4,000 USD per ounce earlier in October. Silver prices are up 70% year to date, surpassing 50 USD per ounce, the historical resistance. Around the same time, gold broke above 4,000.
Okay, and JC, what's driving this surge in the price?
Well, the recent run-up in precious metals is part of the so-called debasement trade portrayed by the financial media. Investors worried about the sustainability of fiscal loosening seen around the world have triggered a flight to safety into real assets, gold and silver being the prominent ones. Other factors contributing to strong investor demand for precious metals include geopolitical tensions, US dollar weakness, and potentially broader asset reallocation, repricing equity risks higher.
Okay, so JC, has the price of silver ever been this high?
Yes, it has actually. Twice, in fact. The first time back in 1980, when the trio of American businessmen, the Hunt brothers, tried to famously corner the silver market, causing the price to spike and subsequently collapse. In more recent history, during the 2011 European sovereign debt crisis.
All right, JC, I know we've got silver and jewelry, but beyond jewelry or coins or bars, are there other use cases for silver?
Oh yeah, absolutely. It's also an essential industrial metal due to its unique electrical and thermal properties. Silver is in photography, electronics, auto manufacturing, and aerospace, amongst other things. It's also used in solar panels, making it an important part of the global push for renewable energy. The International Energy Authority forecasts renewables will more than double by 2030, and solar is expected to make up 80% of that growth.
Okay, so we explored some of the use cases, the value of silver. What about the demand picture? What does it look like right now?
Yeah. For 2025, the Silver Institute, which is the industry's official body, sees a deficit of roughly 115 million ounces of silver. That's 21% lower than 2024.
All right, global banks like to keep tabs on where the prices of precious metals could be headed. What are some of them saying right now?
Global bank HSBC increased its forecast for silver prices to around $44.50 per ounce in 2026. That's up from a prior forecast of around $34. As for gold, Goldman Sachs forecast the price to reach 4,900 USD per ounce by the end of 2026. The Wall Street Bank is basing this on strong ETF inflows and continued demand from global central banks.
Okay, so JC, with gold and silver prices at these highs, have investors sitting on the sidelines missed out?
Well, precious metals have a place in any diversified portfolio. Just what place it is depends on investors' risk tolerance and financial goals.
Now, JC, these assets have a pretty rich history, deeper than a lot of others. Let's do a history deep dive. How did we get here? What's the background?
Sure. For thousands of years, precious metals like silver and gold have been used as a form of currency to enable transactions and store value. A quick look at historical silver prices clearly shows the Hunt brothers' silver squeeze, as they were accumulating, some might say hoarding, the physical metal throughout the 1970s, running the price up from high single digits to around 50 USD at its peak, all in the last year of that decade. Silver prices reverted aggressively, and by summer of 1981, silver prices were back to below $10 per ounce. It was estimated that the Hunt brothers held roughly 1/3 of the world's supply of silver, excluding government inventories. Silver had a resurgence during the 2008 financial crisis, doubling to $20 per ounce. As economies recovered, silver underperformed until the Eurozone debt crisis in 2011, propelling silver back to its $50 per ounce historical peak. Investors may view gold and silver as mutually exclusive choices, but in reality, the two metals are connected.
Okay, JC, and is there something that measures that relationship?
Yes, the gold to silver ratio is often used by investors to assess the relative value of the two precious metals. It measures the number of ounces of silver needed to buy 1 ounce of gold. Historically, the ratio has averaged around 65 over the last 30 years. The ratio is currently hovering around 80, down from its post-liberation highs of just over 100. This could signal that silver remains undervalued relative to gold.
Okay, now JC, are there any downsides to precious metals, things for investors to be aware of?
Well, physical precious metals don't generate any interest or any dividends. You have to sell the assets to realize any gains in value. They may also be difficult to sell, making them less liquid than stocks. Physical gold or silver also comes with additional carry costs such as storage and insurance.
Okay, now beyond gold bars or silver coins or mining stocks, is there a more efficient way to invest in precious metals?
Yes, absolutely, John. An ETF is a great way to obtain exposure to precious metals with the same liquidity profile as stocks. The ETF wrapper is especially useful when looking for enhanced or cash flow generating exposures. We've recently launched Canada's first silver-focused covered call ETF, the GlobalX Silver Covered Call ETF, ticker AGCC. AGCC offers direct exposure to the performance of silver bullion while providing monthly cash distributions. These come from written call options on a portion of the fund's silver exposure.
And JC, why take a covered call approach to silver?
Simply put, this is one of the ways to achieve monthly income from an investment in physical precious metals, which otherwise wouldn't provide any. In particular, silver is a great candidate for this, especially with current market trends. Implied volatility in both gold and silver have also increased in recent years, with the silver 1 month at the money implied volatility is on average 8 volatility points higher than its gold equivalent.
Now, volatility is something we often associate with investment risk. That's good for silver and covered call strategies?
Yes, it is actually. This higher level of volatility allows us to generate greater option premiums, making silver particularly well suited for a covered call strategy. By writing calls on a maximum of 33% of the silver exposure, AGCC offers investors the opportunity to capture attractive monthly income while still maintaining participation in the metal's long-term trend.
Okay, and what about investors who want to invest in silver specifically rather than an income-focused approach?
GlobalX offers direct silver exposure with the GlobalX Silver ETF, ticker HUZ. This ETF offers a transparent way of gaining exposure to the price of silver without the need for self-custody. We offer several avenues to access both gold and silver markets. Along with bullion, we offer funds that invest in equity of mining companies.
All right, well, in a climate of trade and geopolitical tensions, it seems like gold and silver are pretty helpful portfolio tools.
Gold offers a traditional hedge in volatile markets, while silver's mix of industrial and precious metal demand adds diversification. With silver trading at a discount to gold and supply lagging demand in 2025, investor interest may continue to grow. Whether it's through bullion, miners, or derivatives, investors have flexible options to obtain exposure and position themselves in this uncertain global macro environment.
JC, thanks very much. If you've got questions about our full suite of precious metal ETFs, there's more details at GlobalX.ca. And if you've got questions about precious metals, put them down below. Make sure to subscribe and like, and don't miss our next GlobalX video. We'll see you next time.